Hello, everyone. My name is Maribel Reyes, your Florida Realtor. I'm sitting today with a credit specialist. Her name is Karla, and my personal mentor. We are here to touch on some bases regarding how credit could impact your home buying.
Thank you, Mari, for having me. Funny story. This is actually the first time we meet in person.
Yes.
Ever. We actually met. We met what on Instagram?
Yes.
We met on Instagram and we connected. And obviously, for someone like myself that is in the finance industry, it's always good to connect with realtors, lenders, anybody that's does any kind of financing.
Right.
And I always get value out of talking to you guys and understanding, what you guys need, and also how I can further help my clients, because for whatever reason, a client thinks that just because you fix your credit, you also can sell them a house and give them a loan. And I'm like, I can't, but I have someone for you. But sometimes they ask questions, and they're questions that I know I can answer, but it's from basically what I learned from you guys. So the objective of pretty much us meeting today is just kind of bringing our customers a little bit more information about how to qualify for a home, some taboos about credit, what they should be doing if their credit's not up to par. Maybe they do have good credit, what they need to do to maintain their credit well to be able to get all the way to the end line of getting approved, right? Because a lot of the times I've noticed that people's credit is good for the pre-qual.
Right.
And they don't understand that, like, you got to chill. Don't go buy a brand new car.
Exactly.
The client of mine do that. He bought $100,000 car right before getting out of house. And I was like, well, why would you do that?
Oh, my God.
Yeah. So little things.
Our nightmare.
Exactly. And because I'm the one who talks to them more often about their finances, it's important for me to know things like that, which I learned over the years of working with you guys. So clients are like, hey, I'm thinking of buying a house. I want to get a credit card. I'm like, nope, don't do anything. Don't do anything. Pay down your debt. You can wait for that. Get the house first. Do everything after.
Exactly.
So, when you're ready, give me some common questions that maybe your customers ask you, or anything that you want us to share with our customers today so that they can purchase a home.
So, like, for instance, if you have a client with a 580 credit score, which is the typical requirement for an FHA loan, but they still want to increase it to get a better rate or whatever the scenario may be, but they want to say, let's say 5-6 months, do you think that that's a realistic time frame to be able to increase that credit score?
Yes, so I think that 6 months is like the perfect time for you to reach out to anyone. Even if you just want credit counseling, you want to make sure you're up to par. I think that's the perfect time. I absolutely hate when clients reach out to me maybe like a month and they're like, oh, I'm buying next month. And I'm like,
and we need a magic.
Yeah, I'm like, honey, no. Like, I don't care whose credit repair company you go to. Like, it's not going to happen, because I learned through working with lenders and realtors that you shouldn't even have an open dispute while you're going through a home buying process, going through the closing of a home. So I tell them, like, don't even open credit repair right now. Like, don't even open disputes. It's not going to work. They're going to tell you to close them.
Absolutely.
So I think 6 months is a good time frame. Gives you enough time to, 580, like you said, it's the minimum. But it is. I tell my clients.
I mean, you could do 510, but that requires a 10% down, which it defeats the purpose. Exactly. So that's what I'm saying. 580 is the FHA, but, they still want to increase it to get a better rate, or they're probably conventional, So that's what I'm saying. Maybe what is the realistic?
I told mine 620.
Yeah.
Which I think is FHA, right?
FHA minimum requirement is 580.
580? So which one's 620?
620, 640 is conventional.
There you go.
Again, depending on the down payment that they give.
So I always tell them, don't put your eyes on the bare minimum, because bare minimum only gets you by, right? You're not going to get the best rate. Like you said, you're going to have to put more money down. So if you come to me with at least 6 months, if you have negative items, it gives us time to remove things. If you lack credit history, it gives us time to add a positive history. And it just gives your credit time to settle, because something that people don't get is that, like, credit is constantly fluctuating. Every month you use your credit card, it goes down. You pay it off, it goes up, and it's constantly doing this, right? So if you give it 6 months, you give it time to settle, kind of like the ocean and the waves, and like it settles eventually. Same concept. So that's a realistic time frame. Honestly, if you can even do it a year, 8 months before, even better, so you're not rushing. Because what happens a lot of times is people rush, right? 6 months is ample time if you're already at a 580, but if you're any lower than that, you need at least a year. Not to fix your credit, but to just do things in a timely fashion where you're not rushing, you're not stressed out, you're not stressing out your realtor, you're not stressing me out, you're going to stress me out. So, yeah.
Yes. How about for like a client who has like a credit consolidation like myself, that we're starting from scratch? We have to get up there. Like, what is the realistic time frame that we could say, okay, we could get you ready to buy a home? Would you say 6 months to a year, or even more?
So people who do credit consolidation are a little bit different. Typically, when you go into a consolidation program, you are told to stop paying all your accounts, and your credit pretty much goes down the drain. So the thing about those type of programs is that a lot of the times when you go into those programs, your accounts are still open. So the thing about credit and the thing about accounts is that you have to allow them to go through their timeline. Every type of credit account has a timeline. What I mean by that is like when it opens, when it closes, and then when it gets charged off, collections, etc. Right? So let's say your account is open and you start defaulting, you start being late, right? 2 months, you haven't made a payment, and now it's kind of where you're thinking of the idea of debt consolidation. What's going to happen is even if you go into that program, you kind of still have to wait for that account to close out.
Right.
And accounts typically take somewhere between 6 to 8 months to close out. Realistically, it's 180 days, which is 6 months. Sometimes it's before. In some rare cases, sometimes it's later. So the thing is time. Like we go back to the previous conversation that we were having. It's like if you're someone that already knows you're going to do that, keep in mind that if all your accounts are open, you're going to have to give them all 6 months to close and then be able to negotiate them.
Got it.
So it's
Makes
a
sense.
lot of time if you think about it. So if you're someone who has already gone through that process, it's like not someone like I just mentioned that is thinking about it, the accounts are still open, you're already in it, you've gone through it, right? I always tell people if you have some sort of payment arrangement with that company, keep it, right? Something that I feel like I try and blue saying it is like just because you do credit repair doesn't mean that you're off the hook with paying off your debt. You owe debt, period. Every debt has a statute of limitations depending on the state that you're in. It's 5 years, 6 years, 4 years, right? So just you can Google that statute of limitations in whatever state you live in for debt. There's written debt, there's oral debt, but you want to look at open-ended accounts, right? Which is credit cards and loans. So that statute of limitations starts the first time that you're late, right?
Okay.
Now, if you're someone who is late and then you start making payments, you reset that clock. So if you're already in a debt consolidation program and you're already in some sort of agreement, just keep doing that, right?
Okay.
Because at that point, you already like on the deep end with that when it comes to the debt portion of your credit. But on the actual credit reporting side, you are going to have late payments, you are going to have charge-offs, and you can still clean up your file, remove all those accounts while you have the debt that you're taking care of in the background.
Okay.
It's a very strange concept that I tell clients all the time. I'm like, I know it's weird for me to say that you can completely wipe your report, but you still owe the debt, and they're like, how? That's just how it works. Because they have their own database. These companies that you owe, they have their own thing. Especially if you get into a lawsuit or like now it's like a legal thing.
Right.
So that is very independent from what's on the credit report. So you can have a completely clean credit report. I have clients who they're like, I don't understand. This got removed off my report and I'm being sued. And I'm like, yeah, I told you that could happen. Like one thing has nothing to do with the other.
Right.
So to answer your question, if you're someone who's going through debt consolidation, you already entered payment agreements, continue doing that. But also simultaneously, you should be cleaning up your credit report.
Right. Okay. How about if they filed bankruptcy and they're starting their credit all over again?
So
is it kind of like the same scenario?
Kind of. I mean, bankruptcy you can only dispute if it shows up on the credit report as discharged. If it doesn't say that, you kind of have to wait once again for the lawsuit to continue and then kind of get to that discharge portion of the sequence. But you can dispute them. The difference is a bankruptcy is considered basically a public judgment.
Okay.
Kind of like when you have people who have child support on their credit or they have liens. Those are public judgments. Public judgments are a little bit trickier to remove because they are in the books, like they're legal stuff.
Okay.
Which happens to be reported onto your credit, but you have to handle them a little differently. You can't dispute them the way that you would dispute a late payment or a collection. You have to sometimes even contact the court where you filed it, get proof of when you filed it. Really, the way that we go about it on the credit side is that it's pretty much a privacy issue because you never authorize the courts to share any of that information with the third parties, which is true, although we know that public records is public information.
Right.
But the reality is, if you want to look at it from the legal end, you never signed or authorized anything for that to be reported on your credit file. They still do it. So that's one of the ways that we disputed. Doesn't always work. There's so many different ways that you go about it, but it does take longer because it's not just an account that was on your report and you stop paying. Like it's a public, account that's out there in the books of from whatever county or state you live in. So the answer is yes, you can remove it, but it does take longer.
Okay.
It's a public record.
Makes sense. Makes sense.
Yeah.
So let's say we're getting towards the end of the year. I have a lot of clients who are now getting ready for tax season. They want to start, saving for that, or they got to prepare their taxes to be able to qualify to buy a home. But let's say now their credit is a little on and off. And I send them your way. Would you go ahead and guide them and tell them what needs to be done and how to build their credit? In other words, give them the timeline of the game plan of,
Yeah, so I mean, most people, when they are looking for credit repair, they just think, oh, it's just you're gonna get everything off my report and that's it. And I'm like, maybe that's everyone that you work with. I have conversations with clients where I'm like, well, how are you paying your credit card? Are you paying it on this day or that day? And they're looking at me like, what does that have to do with my credit?
Right.
Like everything.
Yes.
Because when you hire someone to help you clean up your file, they're just doing that. They're just cleaning your file. You're still responsible for being on time with your credit cards.
Right.
You're responsible for keeping your usage low on your credit cards. You're responsible for doing the daily practices that are going to get you to have a good credit score, because pretty much removing something, it's just cleaning the canvas, but you still got to paint and you got to make sure it looks nice. Right. So yeah, I go through that with my clients. I identify pretty much what I see is a weakness in their credit. For some people, it's something that they have bad credit. They just don't have credit history.
Exactly.
So I talk them through programs that I recommend that they should do.
Perfect.
To kind of have them start building credit. Okay, people is they have a debt problem. Like they rack up all their credit cards and they're always maxed out and they're like, I don't get it. I pay everything and my credit never goes up. And I'm like, yeah, because you're maxing out all your credit cards.
Right, paying the bare minimum.
Right. For those people, it's a conversation of helping them understand what is usage, what is credit usage, how do you maintain it low, when should you be paying the credit cards. For other people, it's they have a bad habit of opening accounts, closing them, opening accounts, closing them. So I tell them, look, if when you're opening that account, you don't even picture yourself with that credit card for more than 5 years, don't even bother getting it, because you're going to be hurting your credit every single time that you close it, because you're never allowing your credit to mature. So when I look at the file, I already know where they lack, and I usually go into that first, and I know what they have to do to kind of make that stronger, and then we kind of go through everything else that makes up our credit score. Okay. That's pretty much the guidance that I give clients. And of course, I give them timelines, but if you just learn those core principles that I was just talking about, you can maintain great credit for the rest of your life. And it doesn't matter if you live to 100, 18, whatever, you'll have good credit.
What myth do you think that people have of regarding their credit?
That's a hard question because there's so many. One of them, what I was talking about, is like closing accounts. People are special. I was gonna say another word, but I'm like, let me not offend anyone. I had a client say, hey, I have these 2 cards. I'm thinking of closing them. I'm looking at their file. I'm like, well, why would you close them? They're your best cards. You've had them the longest. Oh, I don't want to pay the annual fee. I'm like, what? Yeah, I don't want to pay the annual fee. I'm like, okay, so why'd you get it in the first place? I'm like, if you close that account, your credit's going to tank, because the only 2 credit cards that you have, they're the oldest because they're the only ones that you have. And then you're not going to have any credit cards. Oh, wow, I never thought about it like that. I'm like, so you better pay those annual fees, So one thing is that people think, not really like a taboo, but like a common thing. Like, oh, I'm just going to close it. I'm not using it. I'm going to close it. And you really hurt your credit. Another thing is thinking that if you just, this is a big one, which is, this one's weird and it's also ironic. People think that by completely paying off all their cards and keeping them at zero, their credit's going to go up. Your credit can actually go down. I had a customer, he has great credit. He's in the 700s. It's just a long time ago he had an issue with a loan, and so that's what we're working out. But his credit's like way over 750. And he's like, oh, what else can I do? And I said, hey, you could just keep your cards low, which we already did. And he's like, oh, what should I keep it at? And I said, really? Everyone says 30%. I tell everyone the reality is if you can keep it at 10% or below, that's like perfect.
Perfect. Okay.
But if you can't, 30 is fine. And so he was like, oh, I just paid him a lot. I'm like, all right, whatever. Then he was like, hey, Karla, I noticed my credit is going down. And I promise you, I've never felt so troubled in my life. Like, we were clicking up and down, looking everywhere, and I really could not figure out why his credit was going down. Like, going down the checklist, I'm like, okay, he doesn't have any new open accounts. I'm like, what the hell is going on? I looked through one of the reports. I go all the way down, and it says, lack of credit usage. His credit was going down because he wasn't using his card.
Oh my God.
And then I thought about it. I had to really, like, that really challenged me, and I had to think about it. And then I was like, wait, credit scores are nothing but algorithms, right? they're mathematical calculations that are constantly generating depending on what happened, what activity is new, if there's risk, whatever. So of course it makes sense. If you're not using the cards, there's no credit activity, the score is gonna be like they don't like that,
Exactly.
So it's strange because clients are like, I don't get it. You told me not to use it. I don't use it. My credit goes down. I use it. It goes. They're like, I don't get it. I'm like, I know it's weird, but the key is you don't have it at 0 all the time. You don't have it too high. You gotta have it just right. It's like the three little bears. It's like the three little bears. It has to be just right. So that's a common one, is like completely paying off your cards and not using them at all actually hurts your credit. So don't do it.
Okay, perfect. Anything else that you would like to tell any homeowners that want to get ready to buy a home?
Homeowners, start planning a year before you want to buy your house.
Okay.
Don't do the 6-month, 8-month thing. I hate
working in a rush.
Hate's not even a word. It's just like, oh yeah, I'm trying to buy next month. I'm like, honey,
it's not realistic.
It's not, because the reality is, forget buying a home. Anything that you do where you're rushing like that is not going to end up good.
Right.
And then you're going to have to work double. So it's like, why rush when you could just do it? So if you are getting ready to home buy, it's been on the back of your mind, you're thinking about it. Number one, like, yes, credit is important. Start saving money. Because even if you don't have to put up a down payment, you should. Or you should have money for repairs, because buying a home is like buying a project.
Right.
Unless you buy a brand new, like with the little bow that just came off, like, you're going to have to put money into that house or something. I don't know what, because I don't know what house you're buying, but save money. Make sure that you're in check with your debt. Like, are you in debt? It's okay to be in debt. What are you doing to manage it? Because something that's huge when it comes to home buying is DTI, which is debt to income ratio, right?
Correct.
And that's something that I try to help clients understand on the credit end, which is just credit utilization. But I know a customer that can understand that will understand DTI, right?
Right.
And if they don't understand either, they're
we're in trouble.
God bless them. We're going to pay for you. But yeah. But the reality is that, DTI, be very conscious of it. If you have to cut your spending, maybe you're someone who does make money, but you have crazy bills.
Exactly.
You might have to make some sacrifices, cut the spending. Definitely check your credit. A lot of the times I talk to people where they didn't even know that they had something negative on their credit. They're like, oh, I haven't checked my credit in 20 years. It's always been 700. And all of a sudden they check it and they're like, whoa.
Oh my God.
And then they usually end up finding out because they go to a lender, they're getting ready to buy or something, they get pre-qualified, and then the lender's like, oh, you have a collection. They're like, what? So
exactly, they don't even know what it is.
Don't it's not the lender's job, it's not my job, it's your job to check your own credit to know what's going on. Just like you go to the doctor and you check your cholesterol and your blood and all that, you should be checking your credit. I'm not telling you to check it every day, because there's cycles who are like, every minute they're like, Karla, my credit just went up, it went down, it went up. I'm like,
exactly.
You sound like a crackhead. But no, it's gonna fluctuate. Don't freak out. Otherwise, it's steady over time. But it's your job to check it. My job is to guide you. Like, I hate, and I'm going on a rant, but clients are like, oh, can you check my credit? I'm like, you could check it too, like. Now, if you're like technologically challenged, which that's okay, then no problem. But if you are not, you should be checking your credit to make our jobs easier. So that's.
And if you're looking to buy a home, you should be contacting us, the professionals, to help you and guide you the correct way.
Like, don't just go to realtor.com and like, don't do that. Like,
no, do everything the right way. We are here to help you. We have a team of professionals that could guide you the correct way and get you into your dream home with great credit, low down payment if necessary, if we can. So we have many programs. The credit does matter for these type of programs. So always reach out to one of us. We could always help you. We could guide you and let you know where you're at, where we stand, and what is our end game.
So where can they find you? If they're looking to buy a house, to rent, to buy, to sell, whatever. Where can our customers find you?
Well, my Instagram, I'm available 24/7. Phone number is 786-859-6532. I work all of South Florida. If you're looking out of Florida, I could still guide you and help you. We have a team of lenders all over the world. So do not hesitate to reach out to us. You are in great hands.
Yes.
Thank you, Karla, for your time and helping me. Personally, Karla has been helping me personally because I did do a credit consolidation many moons ago when I did not know what I was getting into. And unfortunately, my credit went down, and now I have her guiding me the right way so I could also buy a home myself.
You see a perfect example of someone who's like, I need help. Like, I think I know what I'm doing, but like...
Yes, I was tired of using the card. But I know the 30% rate. all of that was back and forth, and it wasn't moving. I was like, what's going on? So we're on the right track now.
You can always reach out to a professional.
Exactly.
If you guys have questions about anything credit, business credit, personal credit, you are looking to buy a home, you're not sure, you can also book a consultation with me. I don't charge for consultations. The only thing that I require, please, for the love of all that is good and holy on this earth, is have your credit report ready.
Right.
You don't go to the doctor without your chart, without your you don't do that. So don't do it with me. Show up with your credit report. If you don't have one, I have a way for you to access one. Okay, so not a problem. You can reach out to me on any social media platform. Credit Karla, you're going to find my booking link on there. If you want to book a call, I'm not going to give you my phone number, but don't worry. When you book the call, I will call you. So hopefully you guys reach out.
She's very available. I guarantee you that 24/7. I've texted her around the clock and she always answers.
Yes. So I'm here to answer questions because I know that there's never, my mom used to tell me and my teachers, there's no such thing as a dumb question. So just ask.
Absolutely.
Thank you, Mari, for this. This was awesome. Hopefully,
yes, thank you.
Customers find it of value, and you guys reach out to one of us. So,
yes,
thank you.
Thank you. Bye. Bye.